Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICAI. We have come almost on to the fag end of our discussion on the topics of GST law. Today's evening, we have this topic on hand. Job work, miscellaneous provisions under GST law. Advanced reading we have finished in our last session. Today's session, we are going to have a few topics on job work and also on miscellaneous provisions. Today's class, you will see the way the GST Act is written by the officer concerned. I'll take you through a couple of provisions where how the drafting happens in the BEAR Act. And before we proceed with our today's discussion as a protocol, let me have confirmation from some of you who have been watching me online with respect to availability of this presentation, audio, and also video. Once I have a confirmation from some of you, let's go ahead with our today's discussion. and also, for your information, I have shared today's presentation material and also have given the Excel file which can be downloaded for your revision purpose. As a practice, what I'm doing, I'll take few questions from the previous topics what we have discussed. We will recap on our provisions and how the problems will be tested in your examination. So first 30 minutes, let us focus on the recap part and then we'll come for today's discussion. And thanks for the confirmation, Namita and Priya. I could say as usual, there is a list of questions which were posted by Namita. Good that you have been revising, Namita, on a regular basis. I'll first take up the recap part and then we'll come back to your questions, Namita. So students, let me open my Excel file, which is already shared with Board of Studies ICAI. I recommend all of you to download this particular Excel file to have it in handy when we solve these particular problems, right? Now, so let's start with our today's discussion. There is a sheet name called Recap 4, dated 3rd Feb 2022, right? So let's start with that. There's a question where it says that Mr. X, a proprietor, registered under GST in the state of Tamil Nadu. Okay. This particular person, he got a contract from Tamil Nadu Municipal Corporation for construction of a bus bay and some development works consisting of existing civil works. So what happened here? This gentleman, Mr. X, he has got a registration and he has been awarded with a contract from Tamil Nadu Municipal Corporation. Can he approach the advanced ruling authority on matters connected with? Point number A, applicability of GST on the above works received. That is, whether he need to charge GST. Is this activity done to by Mr. X to Tamil Nadu Municipal Corporation? Is it a supply? If it is a supply, what is the classification? And what is the rate of tax? So first question is asking in relation to applicability of GST on the works received. Okay. So, point number B, if GST is applicable, what is the details of HSN/service accounting code along with the rate of tax? This is the second question he has framed. Third question, eligibility of ITC on procurements in relation to above project. So this gentleman, Mr. X, is willing to check whether he can claim an ITC in relation to the above work assigned by Tamil Nadu Municipal Corporation. Clause D, confirmation of relevant GST applicable if the same works are executed in the state of Karnataka. That is determination of place of supply as per Section 12 of IGST Act. So this particular topic is picked from our last session's discussion where we have with Section 97, right? So let me have answers from some of you, whereby I'll discuss point by point. So let's start with point number A. So point number A, what Mr. X is asking, applicability of GST on the above works. So question to you students, can Mr. A ask a question under Section 97 in advanced ruling with respect to applicability of GST? When I say applicability of GST, he will say what activity he has done. Is it a supply? If it is a supply, whether GST needs to be paid. Was there any exemption notification? So what would be your answer for clause A? Yes or no? Yes, Deepika, thanks for the confirmation. Thanks, Yogesh. Good. Now, for clause A, what is that you have all got to say? And parallelly, I would recommend all of you, when you're attending my class, students, I would recommend have your institute material in your hand so that you can make a note of the problems along with the solutions in the institute material. Page number 23.7. Page number 23.7. Namita gave her answer. For A, is it a supply? It can be asked. Okay. Now, Namita says yes. And I would also say that yes. This is a question. Yes, permissible for testing under section 97. So under section 97, yes, this is a question which can be asked for. Page number 23.3. All of you, page number 23.3, institute material. So for clause A, yes. For clause B. Next question Mr. X is asking, sir, if GST is applicable, if you say that GST is applicable, please tell me the details of HSN/SAC. Now, what do you understand from this? This particular gentleman is asking, sir, please tell me, you're saying that yes, it is a supply. If it is a supply, I want the classification. Is it to be understood as supply of goods? Is it to be understood as supply of services? And what is the rate of tax? So once you confirm that this is a supply, I want to know the classification along with the liability to pay tax. So for clause B, what would be our answer? Pri also says yes. And Namita already has given answer. For clause B, yes. It is a question which is permitted. So I'll say yes, permissible under section 97. Clause C, eligibility of input tax on the procurements in relation to above project. So Mr. X is asking the advanced ruling. Sir, can I take the input tax credit on the procurements in relation to above project? So here, if you look at your input tax credit, clause D, page number 23.3, clause D. What it says, admissibility of input tax credit of tax paid or deemed to have been paid. So if the tax has been paid, then Mr. X can ask. Now, if X has not purchased the material, how can he ask that question, right? Now, let me see what answers you have given for clause C. Namita says, for clause C, ITC, yes. Namita, don't blindly give yes. You have to justify your point in your examination. Naveen also says, for clause B, yes. Priya also says, A and B, yes. All of you are right so far. Priya and Namita. I could see that Namita and Priya have answered yes for clause C. Don't just like that say yes. Always validate your answer. Reason, input tax, we have to mention that wherever input tax has been paid or deemed to have been paid, only that they can ask the question. What if Mr. X has got a contract? He has not yet started. He is not yet executed. He wanted to know from the authority, if at all, if I paid the tax, can I claim the ITC? So there could be a multiple diversion. So you have to mention your answer, assuming that Mr. X has procured based on that. Assuming that X has not yet purchased, how would be your answer? Namita, SAC stands for Service Accounting Code. SAC stands for Service Accounting Code. And HSN, Harmonized System of Nomenclature. This SAC we use for services, Namita. The moment we see students, since Namita raised this question, let me clarify to all of you. Whenever you look at this term, HSN/SAC, we need to understand in relation to goods, I use HSN. In relation to services, I use Service Accounting Code. Based on this, I would get to know whether it's a goods or services. So for clause C, you will mention that if Mr. X has already paid tax on the purchases, then yes, he can ask eligibility of ITC on the purchases connected with above supply. Now, so what if Mr. X has not purchased? Then there is a blockage. He cannot frame a question under GST law. If at all, this gentleman has not purchased material yet. Who? Mr. X. In that case, sorry, they will say, Mr. X, sorry, I cannot answer you because you have not purchased the material. You haven't paid the tax to your supplier. Students, I draw your attention. Last class, Naveen has raised this point. When we were discussing on this, Naveen mentioned that, so what do you mean by making a payment? There's a time limit of 180 days under GST law. How do we interpret this payment? So answer for that, the applicant, whoever has filed an application, they have to prove to the satisfaction of the GST authority that in relation to admissibility of input tax credit, the tax has been paid as per section 16. So at this point, what Naveen was referring the other day, we all have to take into consideration. Yes, Naveen, your answer is right now. Next, moving on to clause D. For clause D, confirmation of relevant GST applicable if the same work is executed in the state of Karnataka. So X wanted to ask one more question in a particular application. He want to ask whether the GST is payable if the above works are performed in the state of Karnataka, not to Tamil Nadu Municipal, rather to Karnataka Municipal Corporation. So that is a question where he is asking, so what should I be charge GST, SGST, CGST or IGST? He wanted to know the determination of IGST. So for class D, what you will say? Namita has mentioned place of supply. No. For clause D, question cannot be asked. I see that only Namita has given answer so far. Others hope they also agree with this point. For the clause D, you will say no, question cannot be asked under section 97. So this is how you confirm your answers in your examination. Now let's move on to question number 2. Little interesting and tricky question, practical question, question number 2. Miss P, daughter of Mr. PQR. She has taken over the business of her father after his death. So what happened here? PQR happens to be the proprietor. Due to death of PQR, his business was taken over by Miss P. Mr. PQR has not registered himself under GST due to threshold limit in turnover. However, a month prior to his death, there has been an export of service transaction undertaken. Now, so there is a scenario where this gentleman, Mr. PQR, has not registered himself. And why he has not registered? He says that, sir, I have a threshold limit of say 20 lakhs. I hail from the state of Gujarat. In Gujarat, 20 lakhs is a threshold limit. So I haven't exceeded. I didn't took my registration. And PQR business is taken over by Ms. P. Examine the relevant provisions in GST in relation to compliance requirements of Ms. P. What if Ms. P comes to you as you have been appointed as an auditor, as a consultant? She wants to know, so these are the transactions happened. I inherit the business of my father. I would like to continue the business after my father. So what would be your answer? Should Ms. P need to register under GST? Need not register under GST. Is the activity of PQR in compliance with the law? Not in compliance with the law. What would be your answer? These questions have been tested, students, just to test your knowledge on the previous classes, what we have discussed. We have already discussed registration. We have also discussed penal provisions. So from that backdrop, I felt let me test this particular point. Namita is asking one point with respect to clause D. Sir, if you make the payment to supplier on 175th day, then we can ask the question only after making the payment. Yes, Namita. Because the officer will say, as per the provision, I have to test this point only when the taxes have been paid. Please show me the proof that you have paid. That's how it will be tested, Namita. I got an answer from Naveen. Naveen says, PQR, okay. I think Naveen says liable to register under GST, that is under section 25. Namita says, Ms. P need to apply for registration within 30 days from the date of export sales. Okay, okay. I could see a mix and match, but not convincing. Now, students, let us examine this way. Mr. PQR. Would be your answer. Think and answer. look at your registration chapter and then give your answer. Now, everyone, let me see if there are any answers on this. Geeta says, yes, Miss P has to register. Geeta says, export is an interstate sale, so liable to register. Now, everyone, I hope you have your institute material in front of you. I hope you have institute material in front of you. Open page number 9.21. Students, come to page number 9.21. Please remember, examination, you have to answer specifically examining each and every point. You cannot come to a conclusion based on section 24. Now, at page number 9.21, persons making interstate supply of taxable services up to rupees 20 lakhs. This point we had discussed earlier. Persons making interstate supplies of taxable services and having an aggregate turnover to be completed on all India basis, not exceeding an amount of 20 lakhs in a financial year, have been exempted from obtaining compulsory registration. This is a reference to notification 10 of 2017. So answer would be no, as per notification 10 of 2017. For your reference, students, page number 9.21 of ICAI material. Now, PQR in the financial year, he has not registered for the reason he never exceeded 20 lakhs. So there is a transaction where he made an export. Now, what is the export transaction? It is an interstate supply. By virtue of section 24, though section 24 talks about your compulsory registration, there is a threshold limit up to rupees 20 lakhs. So when I read these two aspects, students, when we read these two aspects together, what do we understand? We understand that Mr. PQR need not register under GST law. Do you agree with this? Yes or no? Do you agree with this? Before we go to his child, that is Miss P, we need to understand with respect to PQR. Once we get a clarity on PQR, then we will examine Miss P. Because section 22 talks about that point. Geeta, yes ma'am. It is an interstate sale. I do agree. Section 24, which talks about your compulsory registration. Whenever there is an interstate sale, yes, we need to register. However, there is a notification 10 of 2017, which says that in a year, if your total turnover is up to 20 lakhs, though you make an interstate supply, you need not register. So when I read both aspects together, PQR need not register under GST law. Do you agree with this point? Yes or no? PQR, from the PQR point of view. If you are clear for PQR, then I'll go further to explaining all this. Are you clear with the PQR point? Great. Namita and Geeta says, yes, I do agree. Now, students always do an interpretation. Don't jump into a conclusion. Now, let's look at this point. Section 22 talks about registration. Section 22 says that on account of transfer of business as a going concern, I say GC as a going concern, by a taxable registered person, then transferee from the date of transfer need to register. Now, the point here I'm trying to drive through is when I read my section 22, let me just, Students, when I read my section 22, it clearly says a taxable registered person, he has transferred his business as a going concern. When he has transferred as a going concern, then this particular transferee has to mandatorily register. Now, in this case, PQR is not registered. Why is not registered? He is not supposed to register himself. Now, when this business was transferred to Miss P, P need not get registered for the simple reason PQR is not registered in the GST law, right? Getting the point? Only when Mr. P is mandatory to register, then there is a, when PQR is mandatory to register, then his daughter, Miss P, also has to register. So here you will see that answer. Since Mr. PQR is not liable to register, provisions of section 22 in relation to transfer are not applicable to Ms. P. Accordingly, Ms. P shall register on the basis of threshold limit in turnover or compliances as per section 24 relevant. So what we are trying to say, Ms. P is not liable to register on account of your section 22. However, if Ms. P is exceeding in her individual capacity, exceeding the 20 lakhs or any other conditions under section 24, then she will be registering. This is your answer. Hope this is clear, students. Everyone agrees with this? Yes, Geeta, it is not goods, ma'am, because we have said it is services. We have mentioned that it is services. Yes. And like Geeta has mentioned, valid point. Also, we'll make an assumption. Mr. PQR is only into supply of services and not goods. Now, for drawing this interpretation, Geeta has given a caution. So let us presume that it is only services and not goods. I agree with you, Geeta. Then let's move on to the third question. Mrs. ABC and Co. have received a show cause notice under section 73. They have received a show cause notice under section 73. Why have I mentioned section 73? For the reason the time limit under 73 and 74. 5 years for 74, 3 years for 73. That's the reason you have to be very clear. So Mrs. ABC and Co. have received a show cause notice under 73 in relation to the tax ascertained by the proper officer for financial year 17-18 on 30th December 2021. Assuming that the due date to file annual returns for financial year 17-18 is 31st December 2018, examine the relevant provisions under GST law. Now, here, the proper officer has conducted an audit. After conducting the audit, he has pointed out that this entity, ABC and Co., have to pay certain taxes. So to make good of those taxes not paid, a notice under 73 has been issued. Now here, a couple of interpretation points they gave upfront. For financial year 17-18, the due date for filing annual return is 31st December 2018. So they've asked us to find out what is the time limit within which SCN can be issued and what happens to this SCN. What would be your answer? Question number 3, what would be your answer? Students, I recommend please download this Excel file so that you will be prepared with these answers well ahead of our discussion. Always I post this material along with this Excel file so that you can be well prepared with your answers. For this question number 3, I haven't received any answers so far. Is the show cause notice right, or is that the show cause notice not correct? Now, take it from me. 2 years down the line, all of you are going to get qualified and you're going to handle the litigation. So whenever a notice comes, it is your duty to check whether the notice has got a legality. Means whether is it right to discuss or whether it is bad in the law. This is your first activity you need to do. Okay. Geeta says show cause notice is right. Also, Namita says show cause notice is valid. Okay, let us check that. Now, see, section 73, subsection 2 talks about time limit for show cause notice. What is that? It says that my time limit is 3 months prior to time limit for issuing an order. Similarly, section 73, subsection 10 talks about my time limit for passing on order. What does it say? 3 years from annual return, due date of annual return. This is what the order says, right? This is my order and this is my show cause notice. Now, so when I say 31st December 2018 is my due date, from 18, 3 years, 19, 20, 21. 31st December 2021 is the time limit for me to pass an order under section 73. Now, please keep in mind, can an order be passed by adjudicating authority without issuing a show cause notice? Answer is no. Officer does not have a right to pass an order without giving a notice to the assessee. Now, in this case, how much is the time limit to issue a show cause notice? They say minimum 3 months prior to the month, November, October, 3 months prior. So when I travel back in time, I get my 1st October 2021. Sorry. 1st October 2021. There's a small. So October full month, November full month, December full month. So for taking me 3 months, my due date, if I travel back in time, 1st October 21, happens to be 3 clear months. Now, 1 day prior to that. So this minus 1. At least on or before 30th September 21, a show cause notice should have been issued. So in this case, when was the show cause notice issued? Show cause notice was issued on 30th December 2021. Now, what would be your conclusion? Is it within the time limit or is it not within the time limit? So what would be your answer, Geeta and Namita? You have said SCN is valid. So Geeta says no, it is not right. 3 months before the order. Last date for SCN is 30th September 2021. Okay, I do agree with that. Namita, hope this is clear. I think Naveen and others, Sairam, Priya, hope this point is clear for everyone. Good. Now, so you will just say that the SCN is not SCN passed under, okay, let me write here, answer. SCN passed under section 73 is not in line with the GST provisions. It is bad in law. So when it is bad in law, should I need to respond to that? I need not respond. I'll just say that, boss, you don't have authority. Sorry, go back. I cannot answer to you. That's all. Next. Mr. X supplied goods worth rupees 1.5 lakhs, inclusive of GST. So there is a supply of goods whose value is 1.5 lakh, which includes the GST, without a proper cover of e-waybill issue. So what happened here? This particular gentleman has supplied a material without an e-waybill. However, relevant tax invoice has been duly issued. During the departmental audit, the above aspect has been noted by the proper officer. Examine the applicable penalty in this regard. So I want answer from some of you who have attended this demand and recovery, the favorite chapter. Most of you were very, very enthusiastic in this demand and recovery. Penal provisions. When we discussed offences and penalties, we have discussed under section 122, there were 21 penalties. So let me see who is going to answer this penal provision. What would be the penalty, ma? Under which section we will slap a penalty? Pick. Sairam says 30th September. I do agree with you, Sairam. Yes, Geeta, your point is also valid. But this non-issuance of an e-waybill, what would be your answer? Is this good? Is this not good? What we have to say? Okay, I don't see an answer. Let me give the answer for this. So with respect to this, section 122, I draw attention of students to page number 21.4 of ICAI material. Page 21.4 of ICAI material. So as per page 21.4, there is a penal provisions under section 122. Come to page number 21.6. They, clause 14, transports any taxable goods without the cover of documents as may be specified in this behalf. So this is a occasion where, as per provisions of section 122, e-waybill not duly prepared. Now, is this a punishable offense? Answer is yes. So what is the penal provisions? It says 10,000 or tax evaded, whichever is not paid. Okay, great. I have one fantastic answer from Saira. So goods are delivered within a 50 kilometers, then that is why X has not reached e-waybill. I do agree with the logic of Saira. To answer that, Saira, we can put it this way. Examination, we can put it this way. Assuming that goods are not meant for movement within a distance of 50 kilometers, where part B either not prepared or not required to be updated. Now, this is my first assumption, right? Now, going from there, Saira, making the assumption as above, we will say that since the e-waybill is not duly prepared and relevant taxes have been duly paid as per the tax invoice, penalty of rupees 10,000 plus 10,000 is applicable under section 122. Examination, don't worry that you have to quote 122 subsection 1 clause 14. Absolutely don't worry. So what if I don't remember section 122? It's 83, 76, 79. There are certain sections I don't even remember. So in case if you don't remember under section, then you can say as per the GST provisions. So don't worry, like examination, marks will not be deducted just because you have not quoted the right section. Saira, hope this is clear, ma'am. Namita and others, hope this point is clear. Good. I could see that students having multiple views, like now before even coming into conclusion, they're looking from different angle how this can be defended from the levy or penalty point of view. I appreciate your points. Now, next question. Mr. A has supplied goods worth rupees 12 lakhs, including taxes, to SZ customer. Mr. A has not received the payment from the customer and accordingly he didn't pay any taxes to the GST authority. Examine the relevant GST provisions in this regard. There is a transaction where this gentleman A has supplied goods worth rupees 12 lakhs to a SZ customer. Now what happened here? This gentleman A has not received the payment from his customer. Accordingly, this supply of 12 lakhs was not shown in the GST returns. So what are the GST provisions? Quite tricky question. Now, should I look from penalty point of view? Should I look from demand and recovery point of view? Should I look from GST registration point of view? Where we have to look in? Quite a multiple exposure this question has got. And take it from the students, when we read the questions, like the questions, whatever I'm framing, this is like connecting dots. You read multiple provisions, I club, bring and assemble together to understand how do we give a solution to the assessee. Okay, there's no answer for this. Let me give the answer for this. Now, look at this transaction this way. This particular transaction, we first and foremost say that it is a zero rated supply. Section 16 of IGST Act specifies a zero rated supply. Now, is this a zero rate supply? Answer is export of goods, export of services, supply of goods or services to SZ customer, SZ unit or developer. These three are considered as by zero rated supply. So you will say that supply made by Mr. A is a zero rated supply. Now, when I make a zero rated supply, there are two choices. What is that? Always my zero rated supply has got supply with payment of tax, supply without payment of tax. I'll mention clearly IGST so that you'll not have a confusion. Now, I can make a supply without payment of IGST, or I can supply with payment of IGST. Now, here we don't know. In the given problem, A has chosen first route or second route. That is first route with payment of IGST, second route without payment of IGST. There is no clarity. The question says that A didn't disclose this transaction in the return. Now, look at your section 122. There are 21 clauses. Page number 21.4. Now, when you look at page number 21.4, clause 3, collects any amount as tax but fails to pay to the same to the government beyond a period of 3 months from the date on which such payment becomes due. So here we have to make an assumption. Was it with payment? Was it without payment? So, since the answer question is not clear, we will make an assumption. Supply is without payment of IGST under LUT or bond as per Rule 96A. So here, this gentleman has made a supply without payment of taxes. The moment I say with payment of taxes, look at your section 122, clause 3. Collects any amount as tax but fails to pay the same to the government beyond a period of 3 months. The moment if he has collected the tax, then penalty under 122 is applicable. Also, if you recollect section 76, there was a provision called section 76 which talks about your taxes collected but not paid. This section 76 is a draconian provision. Why draconian provision? 76 says that penalty equivalent to the tax amount. So here we'll make an assumption that It is a SEZ supply with LUT or bond. Okay. Fails to detect tax, fails to collect tax, takes or replaces ITC, fraudulently obtain ITC, takes or distributed ITC in contravention, is liable to be registered, furnishes any false information with regard to registration particulars, obstructs or prevents an officer, transports, suppresses his turnover, leading to evasion of tax under IGST, under this act. Now, look at here, clause 15. Suppresses his turnover, leading to evasion of tax. Now, isn't it a suppression? That supply which has taken place is not disclosed. So there is a turnover which was not reflecting in the returns. So what you will say, students? Answer. Section 122, subsection 1, clause 15. The above act of Mr. A is a suppression and is a punishable offense. Is a punishable offense. Penalty of rupees 10,000 or tax evaded thereof shall be recovered. So here, whatever, like 12 lakhs they have said inclusive of taxes, answer would be 10,000 under CGST, 10,000 as SGST. Whatever amount he has to pay but not paid, that will be recovered from him. I could see an answer from Geeta, where she says that 6 months he has to pay GST. 6 months for which question, Namita? Within 6 months he has to pay GST. Why 6 months, Namita? From where that 6 months point has come into picture? And also Namita says for question number 5, okay? For question number 5, A need to pay tax on it as it is a zero rated supply. Zero rated supply, Namita, I have two choices as we have discussed. So let us take that it is a export without payment of IGST. Okay. Sairam says the supplier can make without payment of tax. So we have chosen the second option, Sairam. Choosing the second option, we have concluded that it is a suppression. Namita, I think you're going back to the initial conversation. Namita is asking this question. Sir, in case of zero rated supply, why there is a tax payment? Namita, whenever I choose to export with payment of tax, I get a refund. That will be the reason I choose with payment of IGST. The moment I say I have paid the GST, I'll get back a refund. So I have a choice when I look at my zero rated supply. Export with payment of tax, supplies to SEZ with payment of tax. Why do I do that? To get a refund from the GST authorities. Whatever taxes I have paid, I get back as a refund, Namita. That is the reason. Now, let's look at question number 6. Mr. Speaker Limited have received intimation from State GST Officer to deposit the sum payable to Mrs. Hopeless Solutions Private Limited, who is a vendor of PQR Limited. Now here, there's a transaction where the GST officer has approached directly to the person called PQR. What they say, look, PQR, you have received some material from a vendor called Hopeless Solutions. So whatever money you have to pay to this Hopeless Solutions, it should be paid to the state GST officer. As per the notice, all the sums due to the above taxable person has to be instructed to be deposited, has been instructed to be deposited with respect to GST office at a notice to the tune of rupees 24 lakhs or actual amount due without further delay. Examine the relevant GST provision. Now, so here, what happened? The state GST officer wrote a letter to a person called PQR. What they say, look, PQR, you have your supplier called, this is Hopeless Solutions. This entity is a defaulter. Because this entity was a defaulter, whatever money this particular PQR has to pay to this Hopeless vendor, the government, state GST says that you don't pay to this fellow, rather you pay to me. So let me just brief once again the same transaction to you. Supplier, buyer. Supplier happens to be Hopeless Solutions. Hopeless, Solutions Private Limited, PQ Limited. And buyer happens to be PQ Limited. Now, the state GST has demanded that state GST has given a notice on whom? They have given a notice to the buyer saying that, boss, this vendor happens to be a defaulter. So you have to pay some amount, PQ has to pay some amount to this particular party. Now, is this possible, students? Is there a mechanism where the GST authority can go to the other party? Is there a possibility? Namita says PQR will pay to GST authority. Sairam says recovering the taxes from customer is customer of Hopeless. Yes, this is a permissible action. So answer for that, students, I would say that this is called, there is a technical name, garnishee notice. No, it's a technical jargon. It is not as per the law, it's a technical jargon. What it says, as per provisions of section 79, which deals with your recovery of tax. Yes, state GST has a right to recover taxes due from Mrs. Hopeless Solutions Private Limited from the customer. So this is what you will mention. Now amount shall be paid as per the agreed upon terms. Now, this particular government officer cannot say, I have sent a notice, you make the payment immediately. No, they have to pay as per the due date norms. Let's come to the last question of today's discussion. This question, Mrs. PQR company have rendered their services to their customer called Mr. P in relation to building design services related activity during September 2020 for rupees 5 lakhs. The above supplier has reported the above transaction during December 2020. Examine the relevant GST provisions. So there was a service rendered. This entity PQR has given services to Mr. P. This particular services should have been reported when this was services rendered during September 20. Reported in GST returns December 20. Now, is this in line with the GST law? What is your viewpoint? Okay. So here you will mention that as per section 13, which deals with your time of supply, read with section 31, which deals with your time of tax invoice, and rule 46, which deals with your tax issuance of a tax invoice. Time limit of 30 days from the date of provision of service. A tax invoice has to be issued. So here what happened? This tax invoice, instead of September 20 when I have rendered the services, on or before 30th October, I should have raised the invoice. But what I have done, I have issued in December. So for this, we draw to the provisions of section 122, subsection 3. Come to page number 21.8 of your institute material. Page 21.8. Clause E. Fails to issue invoice in accordance with the provisions of this act or rules made thereunder, or fails to account for an invoice. So here what happened? Mrs. Speaker has issued an invoice, but was that invoice issued within the time limit? Answer is no. So there is a contravention. So when there is a contravention, penalty maximum up to rupees 25,000. So you'll see that as per section 122, subsection 3, penalty may be applicable up to rupees 25,000 under CGST. So when there is an amount quantified under CGST, equivalent amount will be quantified under SGST law. So these are certain questions which have kept for a recap for today. I think we have spent decent time. Let's come to our today's discussion. So today's discussion. Job work and miscellaneous provisions. Now, this is what we have to discuss by today's class. Miscellaneous provisions, I would say that it will not be so relevant from examination point of view. However, I take you through this miscellaneous provisions to explain how the drafting happens, how the English is framed to protect the interest of the department. Whenever something goes wrong, they always protect that. Look, I did a mistake, but my notice cannot be withheld. I did a mistake. I have a mechanism to make it set right. I have an authority to collect some information from you. So all these aspects were brought in under miscellaneous provisions. So let's start with our job work section. Let's come back to my presentation. Namita, I'll hold back to your questions, ma'am. Paucity of time, I'll take your questions at the again. If not, I'll see next session I'll take. But for sure, I'm going to answer back your questions. So today we'll understand about job work. What are the documentation and records maintained under job work? Issues in relation to valuation under job work. Mechanism of input tax credit under job work and miscellaneous provisions. I'll give an overview and an example point of view, and I'll explain this job work topic. Okay. For understanding this job work, we need to have a clarity on the definition. I'll run you through this job work definition, and I'll come back to this backdrop why this concept has come into the law. Job work means any treatment or process. Now, treatment or process, it is very wide in its application. A treatment or process undertaken by a person on goods belonging to another registered person. When they say another registered person, this job worker may be a registered person. And the expression job worker shall be construed accordingly. So here precisely what we have to understand, treatment or process which is undertaken on goods belonging to another registered person. So I do a job work, the goods are not belonging to me. Take an example. I get I get some empty sheets. What will I do with empty sheets? Now, assuming that I have to prepare a book like this. I get a paper. I purchase a paper. I do the printing activity. I do binding activity. I also do this particular preface kind of thing. Now, can I call this job work? Answer will be no. Reason, assuming that Namita gave me a contract. Sir, I need to get this book printed. Now, Namita just gives me a, the digital version of what to be printed. Now, what Namita has given to me, can I call that as goods? Answer is no. Namita just gave me a content. Like example, you would have seen this, wedding invitation card. When we look at wedding invitation card, I'll write on a piece of paper. I'll just write on my piece of paper that so-and-so date, so-and-so person, so-and-so family, this is a mortar, this is a location. I have my basic content. I go to the printer. That fellow has got his own material. He has got his own stationery. Everything is done by him. Then it is not a job work. Job work means a treatment or process where this activity is done on goods belonging to another registered person. This is a basic point we need to understand, students. Right? Now, I'll come back to my Excel. I'll give you a basic overview and then I'll explain this concept. So when you talk about job work, principles of economy, why we have to think of job work? Now, I attribute, these are the some of the points why job work comes into picture. First is your scale of economy. See, don't look this subject only from examination point of view as a theory point of view. Look at why this topic is relevant for us to understand when we get into the business. See, you may be a qualified chartered accountant getting into practice. You may be a qualified CA getting into industry. When we talk about scale of economy, it's easy for me to reduce my certain operations, to reduce my internal overheads. I'll give example of a organization, and just for academic purpose, not otherwise. Think of BHEL or HAL or ONGC. When we think of these organizations, there's a lot of expenditure goes on in certain aspects where if a small decision is made to hive off, to take out a process. Now, let's take example of your cutting, bending, and heat treatment. Any metal, any material which is of a base metal, could be iron, could be steel, could be zinc, could be copper. Now, these metals needs to undergo a particular process. Say example, everyone has seen this two-wheeler. The two-wheeler which gets manufactured, they need to have certain tools for the two-wheeler to come into existence. Like a tool to pierce a hole, a tool to do a bend in a particular fashion. If you would have seen, like there is something called the headlight. On the two-wheeler, if you see the headlight, students, like this particular headlight, there is a plastic body. Before we used to have a metal body. This particular plastic body has a particular shape. How does the shape comes? There's a tool at a certain degree. I melt the plastic. I put it on a mold. When I put it on a mold, I get a particular impression which creates the desired shape. That's called as a tool. Molds, tools, jigs, and dies. Now, this particular process, if I have to do internally, I have to have a separate tooling room. The cost of tooling room is very, very high in cases of OEM manufacture. So what I do, I give it as a outside job work. For reducing my overhead for the salary, to eliminate the capital expenditure, and also to have a ease of getting the work done. Point number 2, control on costing. When you give a particular item to job work, take example, my shirt. The shirt which I am wearing, if I have to get this particular shirt done, if I have to do in-house, there's certain element of cost which I cannot control. Overheads, you would have been reading your costing, where overheads is having fixed overheads, variable overheads. If I want to reduce my overheads, I can think of getting this particular activity done outside, where a particular element of overhead can be avoided. Now, in case of this apparel manufacturing division, I have various activities. What is that? Cutting, then sewing, then buttoning, then ironing, and also like giving the finishing design. Now, assuming that a particular process has got a set of function, and because of some reason, I have a customer who has given excess load to me. Say Arvind Mills has given a particular process of cutting and then doing an ironing activity, or cutting and joining. This cutting and joining I have been doing for Arvind Mills say for 10 years. Some point in time, they have decided that let me take away that. Now, costing. The moment this particular division goes off, my salary of a particular division goes up. So it is a factor for a manufacturer to decide if I can save a cost if this activity I have outsourced to a job worker. Third, capital saving on infrastructure. There's a huge investment required for a small process. For example, take example of your this battery which comes in your two-wheeler or four-wheeler. The battery, what we see, manufactured by ICAI or Amaron. There could be a small process called assembly or molding. That particular process, to do it internally, I need to have a separate set of team. Rather, what if my material which is coming from a manufacturer, it directly goes to a job worker. Job worker, this wire, you have this Phenol-X wire. This Phenol-X wire, a cable goes to a job worker. Job worker cuts for every 2 meters. He just takes out the ends. He puts a pin, does the assembly, does the molding, and sends back. Now, this particular activity, if I have to do internally, it could be a huge setup where I have to have a separate set of, say, 500 employees only for that activity. I need to have a storage space. Now, all this can be avoided where I route my material directly to job worker. From there, I get the end cut pieces. Fourth, expertise required in certain key process. There are certain people who do only job work where there is a skill set which is not available with everyone. Example, MRF tire, C8 tire. The tires what we see, students, it has got a pattern, it has got a design. So from where do we get this pattern? From where do we get this design? There are certain manufacturers who do R&D full-fledged into this particular designing function. And if I have to get this design in-house in, say, MRF or in C8, I need to have an R&D division. I need to spend a lot. I have to buy the material. I have to give it to them. They have to do a test run. They have to develop that model, and they have to do this implementation. Now, rather, if I give it to a particular expertise who are very well in design and drawing, if they can come out with a particular, as a manufacturer, I'll say, look, I need to have my tire which can withstand up to 150 kilometers per hour. I need to have a tire which can, even if I apply a brake on a slippery road, it can have a full control on my operation. No, I do give a requirement, and this particular job worker comes with the expertise they have. So, certain process where there is expertise required, I may think of job work. Finally, business model, where there is a business model like a family business, like 3 brothers are there, A, B, C. Now, there was a family-run business. Say Mr. P happens to be a proprietor. After P, his successors, A, B, C, 3 sons have to take care of business. So P feels that A, B, C will not be together under one umbrella. Let me give a separate freedom so that they are be happy in their business. So A has to depend on B, B has to depend on C on the process of job work, where all 3 of them have a livelihood. Example, TVS Sons. So this is a well thought of business model where job work has to be given. Now, having said all this, there is a manufacturer, there is a supplier, there is a job worker, and I find someone called customer. I'll give you an example where this process can be applied, where we really need to think of this particular activity. Manufacturer, say, this is XYZ Limited. Supplier, Mrs. ABC Private Limited. Job worker, Mrs. PQ and Company. Customer, Mr. A. Say, there's a manufacturer in the state of Maharashtra. There's a supplier in the state of, Maharashtra, Uttar Pradesh, Tamil Nadu. This manufacturer gets supplies from various states. Job worker, for a moment, let's assume he is in the state of Tamil Nadu. And customer, say he is also in the state of Tamil Nadu. Now, it could so happen that some materials come directly from supplier to manufacturer. And at the instance of manufacturer, some materials goes directly from supplier to job work. I repeat my point. Students, carefully understand this transaction. This is the hardcore for your entire job work discussion. As a part of my business process, manufacturer could have said that as supplier, look, you supply these set of goods to my factory in Maharashtra. And at my instruction, please supply these parts to my job worker in Tamil Nadu. Based on semi-finished goods, which are in a semi-process stage, some of the semi-finished goods can travel from manufacturer to job worker premises. Now, what job worker will do? He does an activity on goods received SFG from Mrs. XYZ Limited and also the supplier of Mrs. XYZ to finish the product. Now, this gentleman or this firm, PQ and Co. What does this PQ and Co will do? They receive the material from the XYZ factory. They also receive from ABC Private Limited. This material which comes to job worker, he will do assembly, he will do a final product, and that final product will be supplied to Mr. A. This could be one example. So can you give an example? Definitely yes. Let's take an example of, say, engine, spare parts, like your cables, acoustic, and control panel. Now, academic purpose, I'm just giving an example, students. Let's think example of Kirloskar, this DG set. Kirloskar is a brand who are into manufacturing of a diesel generator set. Means whenever the power goes off, I have this DG set which automatically puts me back to the power, right? Now, let's assume this business model. Now, I am giving this example. Don't read theory as a theory. From this theory, what is the business model which comes to me? What is the business model we have to learn? Why this provision was brought in? How I can fine-tune this process to my business requirement. So let's assume that for a moment, Kirloskar has got their presence in the state of Maharashtra. Now, Kirloskar, they want to have a presence in the state of Tamil Nadu. All along, all the way from Maharashtra, coming to Tamil Nadu, setting up a plant, having a team to hire, costly exercise. I speak Hindi or the language over there. I don't know Tamil. I don't know the way the business happens in Tamil. Handling labor and all, like, no, it's all costly affair. So what they can do, they can find out a suitable job worker who can do the requirements, who can meet up to the satisfaction of the Kirloskar. This could be one business process. So what happens here? The engine, please visualize when I'm talking to you. When you see the finished DG set, that is the DG generating set, that's a final product. The final product comes from the factory of PQ and Co. How does it happen? The heart of this DG set is my engine. This engine is manufactured by XYZ Limited. Now, this engine cannot be sold as it is in the open market. So when this engine is sold to Mr. A, Mr. A says, what will I do with the engine? I want a DG set. So what happens here? Say, when I have, say for a moment, let us assume that this is an engine. This engine will have a box like this, which is called acoustic. What does this acoustic do? Acoustic is a particular box which controls your noise. I use the term acoustic. Acoustic is a box which has got a capacity to control your noise. Those days, when the moment you switch on your DG set, we used to get a noise like your Rajdoot or Bullet. This acoustic is a box which controls the noise which is emitted from the engine. Now, is that the good enough thing? No. Control panel. What is a control panel? Auto, switch over, switch on. The moment the main power supply goes off, DG set switches on its own. The moment main power comes, DG set switches off. On, off. This is called control panel. Now, what I will do as a job worker, sir, I like PQ and Co goes to Kirloskar and represents, sir, I have this facility, I have infrastructure, I have manpower, I have technology. You give me the instructions, based on your instructions, I do the assembly. So my engine comes from XYZ Limited. The relevant spare parts along with this acoustic and control panel comes to job worker. What does the job worker will do? He will take the engine. He will do the bytes, all connecting the bytes to the engine. He will do the assembly of control panel. On top of all that, he puts the acoustic and he does the test run. Once the test run is okay, this manufacturer gets a customer order from a customer. So based on the order from customer, delivery happens directly from here to here. So the customer could be from Tamil Nadu, Karnataka, Kerala, Andhra Pradesh, Telangana. So look at the business model. Without any infrastructure investment from me as a manufacturer, I can use the services of a job worker for manufacturing, that is assembly and the sale thereof. Now, this is the entire process which happens in case of a job work. Are we clear with this example? If you're clear with this example, I'll explain the provisions of job work. Let me see if any questions are there so far. Yes, Namita. With respect to this invoice which has been raised late, interest under section 50 is applicable. Naveen says that time limit of 30 days from services provide. So here we assume that invoice is issued in December, which is valid. Yes, Naveen. See, services were done in the month of September. Technically, October I have to raise invoice, but I have raised in December. Invoice has been raised, but not in line with the GST law. As Namita said, interest under section 50 will be there. Also, in addition to that, penalty will be applicable. Okay. Suppression of turnover, we can say, or invoice was issued in December. No. Okay. Let me understand my question. Valid point. Couple of questions are raised in question number 7. So in this question number 7, the above supplier has reported the transaction during December 2020. Okay. Now it is not in compliance with your issuance of invoice. So if there is a turnover which was suppressed, probably yes. I do agree with your point, Amita. This point, it is not issuance of invoice under section 31. Rather, it is a reporting of the transaction in October month that written. So if it is not reported in October, it will be called as a suppression of turnover. Interest is applicable. Penalty in relation to suppression is applicable. I do agree with Namita and Naveen. Both of your points are valid, I do agree with you. Namita says job work provisions are already thought by Vignesh. Is it so? Like, okay. Let me have one or two other confirmation, students. Namita says that job work is already covered by Vignesh sir. If it is already covered, I'll happily skip this job work provisions and I'll come to my miscellaneous provisions. Let me have confirmation from one of other two students so that we will skip this job work and go directly to the miscellaneous provisions. Namita says that this is already covered by Vignesh. Shall we continue or we will skip? I'll wait for another 30 seconds, friends. There is a little time gap between your question posting and I receive at my end. Namita says that this job work is covered by Vignesh sir. So if it is already covered, we can straight away move on to miscellaneous provisions. Okay. Siren says that, sir, please explain some of the points of job work. Okay. So what we will do in that case, I'll not go in depth of these provisions. I'll just explain you at a broader perspective and then we will go. Maybe we are at 7:17. Another 10 minutes I'll spend on this and we'll come to the miscellaneous provisions. Okay. Now, in this entire business model, what are relevant for us? Question comes here. Sir, section 16 with respect to ITC availment. The spare parts are supplied by this manufacturer to job worker. So when the goods are going to Tamil Nadu, the invoice is coming to Maharashtra. Can I claim the ITC? Can I deem to be called as a recipient of this material? This semi-finished goods, when it travels to Tamil Nadu, from Maharashtra, when semi-finished goods travel to Tamil Nadu, will it be called as a supply under section 31? What is the relevant time of supply under section 13? Can I call this semi-finished goods? When the semi-finished goods travel from my place, that is the manufacturer place, to the job worker premises, what happens to that? Can we say that this material has been supplied under a contract where you have to raise a tax invoice? Or, so can you take a shelter under section 31 not to issue tax invoice? Then the third aspect comes as your valuation. Now, these are the few aspects which are connected with this job work. So here, reference to section 143. There is a time limit given for job work. If inputs are sent, if capital goods are sent, any material which is sent to job work, my inputs should be received back within a period of 1 year from their being sent out. In case of capital goods, the time limit is 3 years. So, like in this process of DG set manufacturing, what if Kirloskar has sent their machinery to Mrs. PQ & Co? If the capital goods are sent for job work, it has to come back within a period of 3 years. If the inputs are sent to job work, it has to come back within a period of 1 year. Now, so what if this time limit of 1 year and 3 years is, because of some reasons, I couldn't receive it back. Commissioner has the authority to extend this by another 1 year and capital goods by another 2 years. There is a certain business process where this material cannot be received back within 1 year, that is inputs. Capital goods cannot be received back within 3 years. So my commissioner has the authority to extend that time limit by another 1 year, another 2 years. Right? This is what we need to understand. Now here, Supply is made from PQ and Co, that is Tamil Nadu, to the end customers. Like example, I happens to be an individual customer. I want to buy a DG set for my residence. Like I have residence, it's a joint family. We have say 15 people in this particular home. So when we want to buy a DG set, it costs me say 2.5 lakhs. I directly place an order on Kirloskar. I stay in the state of Karnataka. Kirloskar is in the state of Maharashtra. So what happens? Kirloskar will receive money from me. Kirloskar will instruct PQ and Co to supply that DG set directly to my residence in Karnataka. Now, in this case, supply of goods from the premises of job worker. From the premises of job worker. That is Mrs. PQ and Co. So this aspect is also encouraged. They say that, look, when the goods are manufactured, at the job worker, let those goods be supplied from the premises of a job worker. Sir, is it valid? Yes, it is valid. Sir, is it permissible? Yes, it is permissible. The only condition is job worker should have been registered under GST law. Only then this can be entertained. So the GST provision says that if a principal sends the goods to a job worker, if the job worker is registered from the premises of the job worker, the goods can be supplied by the principal. So what if principal is in Maharashtra, job worker is in Tamil Nadu? Answer is yes, very much possible. On the basis of the invoice given by Kirloskar, that is the IGST invoice, the goods will be shipped from Tamil Nadu to Karnataka. That is also permissible activity. Moving further, time limit we have understood, supply also we have understood. There is something called Form GST ITC 4. This is a written to be filed by the principal for what? Goods sent to job work during a period, goods received back from job work during a period. Now, information, goods sent to job work, goods received back from job work. These two information are to fill in a form called ITC 04. This is a recent amendment, students. Examination time limit point of view. You have 20 marks allocated for recent amendments. One question you can expect from this point. An aggregate turnover in preceding financial year greater than 5 crore, otherwise, other cases. Once in 6 months. Once in a year. So my job work return should be filed once in 6 months in case of aggregate turnover exceeding 5 crore. Any other case, once in a year. So when I say once in 6 months, April to September, October to March. Earlier, this periodicity was once in 3 months for all the registered persons. I repeat, prior to, this was the amendment which took place in October 2020, I believe, 21, I think so. I'm not sure with the date, but this is a recent amendment which is applicable for May 2022 attempt. So in case if the aggregate turnover is exceeding 5 crore in the preceding financial year, I file this form once in 6 months. In case if it is other case, I file once in a year. So April to March, I file only one return in relation to job work. Right? Now, these are the points which are relevant for your job work. Now, from here, let's move on to the next topic called Miscellaneous Provisions under GST law. Institute material. (24.2). I give the backdrop why this topic is there. What is the relevance of this chapter? What is the relevance of this chapter? Oh, sorry. There's a blockage of my Excel file. Now, from here, students will move on to the next topic called Miscellaneous Provisions under GST law, page number 24.2. Again, I don't make you to look from examination point of view. An opportunity given, how does the drafting happens? How does someone protect the interest of the lawmaker? This is apparently visible under this chapter called Miscellaneous Provisions. This particular chapter is a backbone to come and protect. Like example, see, when a son or a daughter, like when a child does a mistake, always the parents come in to protect the child. Like they protect the interest of the child. Say, by some reason in school something goes wrong, like the son or daughter, as a children they fight in the school. So when someone goes to the school, they generally try to protect the interest of their children. I see the same attitude in this miscellaneous provisions, where the GST officer, the particular proper officer, they have this provisions to gather information. They have these provisions to protect when there is a show cause notice given or an order passed with some mistake on that particular order. How do they protect their interest? Or they have a mechanism to frame the law or frame a rule. People are listening to me. I don't know how many of you have seen the budget which was presented 2 days back. 1st Feb, we had this budget presentation. And once you see this budget, you feel that this is not a law which is user-friendly for the taxpayer. This is not a law which takes care of the requirements of a businessman. Now, to protect all the mistakes done, miscellaneous provisions comes in rescue to say that whatever do's and don'ts are there, now all these have been controlled by way of this particular ancillary provisions. And in the process of drafting, I'll show you some English, how the English was drafted in a loose fashion without understanding what is the meaning, what is the essence of this provision. So for your examination point of view, there are 2-3 provisions which are important. But for those 2-3 provisions, rest all are just for academic interest. Like there is one provision under section 160, 164, 168. Entire process, there is one beautiful topic called taxation and other laws, relaxation and amendments of certain provisions. This is one provision which is connected with section 168A. If you have remembered, there is something called Vivad Se Vishwas scheme. When COVID started, 2020, this section 168A was introduced under, by virtue of this taxation and other laws for income tax, Vivad Se Vishwas scheme, the GST law, central excise law, and couple of other provisions. What they have done, whatever activity was to be performed by an officer, whatever an activity to be done by way of an appeal or to file a refund application, certain aspects were deferred. So this is one fantastic provision I would draw your attention to, where the government has first time, like in my knowledge, I've seen first time, even when tsunami came in Tamil Nadu, we haven't seen this sort of provision brought into the laws, the tax laws. This was the first time by virtue of an ordinance, taxation and other laws, there was an insertion of 168A. So entire this process, this chapter, we will see what authorities were given to the GST offices and how they have protected their interests. Look at your page number 24.2. Students, page number 24.2. Right from section 144 till your section 171. Section 144 till section 171. These are all classified under this miscellaneous provisions. Chapter 21 of the Act. Here, like if you have a pencil, I would read certain sections, which are the pet sections you can expect from your examination for 2 to 4 marks theory question. You can circle the sections. Section 150, Section 151, Section 160, 170, 166, 143, that is job work, which we have discussed just now. 155, very, very important. 155. 171. Now, these are certain provisions which could be tested in your examination for the weightage what they have got in terms of the importance under this law. So let me just quickly come to let me go to the respective slide. Okay. So let's start with this miscellaneous provisions under section 144. Section 144, this talks about your presumption as to documents in certain cases. Now, see, we have discussed this section 132, which talks about certain offenses like cognizable offense, non-cognizable offense. Cognizable offense, which is a punishable offense without a bail. There could be a person who can be arrested without a warrant. Non-cognizable offense, where offenses which has to have a warrant before arrest. Not a serious offense. Cognizable, serious offense. Non-cognizable, non-serious offense. Now, this section 144 says that, look, whatever documents we have taken in the process of my audit or whatever be the mechanism, documents which are produced by a person under this act or law, documents which have been seized from the custody or control of a person, documents which have been received from a place outside India in the course of a proceedings. Now they say that all these documents are the relied upon documents for the purpose of my prosecution. Section 130, 131, 132. Confiscation, then punishment of certain offenses. They say that any documents which are taken in the process of the regular course of audit, I take that as a base for my prosecution. I'll give an example, which just few days back we had this experience. So there was a summons which was issued under section 70. Summons is a process where the concerned officer draws the information from a registered person. And whatever information was given in the process of summons, this could be taken as a base for the purpose of confirming a liability of tax to be paid but not paid. Some of the serious offenses under section 132. Now, there was a statement taken from an accountant under section 70. Summons was issued. Accountant went to the premises of the GST department. He was asked, you produce some purchase documents, you give certain sale documents. In the process of explanation, the accountant said, sir, this material were sent from the head office in Tamil Nadu. We are operating in Gujarat. So this material, I received a bill from Tamil Nadu to account at my branch, but this material never came to my branch. This was a statement given by the accountant. Now, what happened here? Head office was there in Tamil Nadu. The branch is there in Gujarat. From head office, bill to happen to the branch, ship to happen to the client directly in Gujarat. Bill to branch in Gujarat, ship to the customer in Gujarat. Again, invoice was raised from this particular branch to the particular customer after a period of 3 to 6 months. Now, this process, accountant didn't understood that this was a moment bill to ship to transaction. He simply said, sir, I received an invoice, but I never received the material. This was a statement given. On the basis of this statement, whatever input tax was taken in the state of Gujarat was forced to be reversed, and they have issued a particular demand under section 74, saying that you pay so much of tax. If you haven't paid within so and so time, I'll go under my summary assessment to pass an order. And they have, in fact, passed an order within a span of a week's time, saying that you have not responded to our notice, and they have come for attaching the bank account. Now, all this happened by way of a document collected under summons. Now, in this particular scenario, assuming that you happens to be a CFO who sits in Tamil Nadu, what choice you have got? You are a CFO in Tamil Nadu. There is a statement given by your accountant in the state of Gujarat. Can you go back on the document which was given by your accountant? This is what discussed under section 144. What they say, any document which is given in the regular course of business, or a document which has been seized by us, or a document which is called from a place outside India, I presume, who presumes? I as an officer, I presume that these are the documents in certain cases. So these documents will be called as evidence, and it shall be used in a court for testing or putting into a trial for tax evasion related cases. Now, unless the contrary is proved by such person, that means until and unless I happening to be CFO, if I don't counter that particular statement given by accountant, it cannot withstand to the test of law. That means to say, when an officer has come for a particular recovery, I apply this section 144 and say, my dear officer, I agree that this was a statement given, but I feel that there is a error, there is a interpretation, there is a mistake in this particular statement. You cannot rely on this as evidence for the purpose of confirmation of taxes. So section 144 says that unless there is a contrary, unless I don't admit, if I admit, it is no officer has a right to put me for evidence and go against me for recovery of taxes not paid. If I don't admit that the contents are not correct, that the signature or every other part of the document is not correct, I admit that this document is not correct because it is not duly signed by me. Whatever be the reasons I have, I can put across under section 144 to say that no, this cannot be taken as a evidence. So here, officer cannot blindly take that as a documentary evidence for the purpose of putting to a trial the assessee concern. This is what my section 144 talks about. Section 145. Now, I'll come to this particular section to give you a backdrop where there is something called Evidence Act. As for the Evidence Act, any document which is recovered at a particular registered business, business premises of a person will be put forth to the test of evidence before the authority concerned to recover the taxes due but not paid. In the process, they say that every microfilm, that is your, those days we had floppy disk. Now we have this hard disk or this pen drive. Any data which is there in a soft form, any data which is there as a fax, any data which was available as a computer printout. I'll give an example. There was a real estate company. This real estate company was raided under section 67 with a prior approval of a joint commissioner. Please keep in mind, section 67, search and seizure, a prior approval from a joint commissioner is mandatory. So this real estate company, there was a raid, there was a search conducted by the GST officers. In the process of this particular search operations, there were some loose sheets like this. Now you can see the sheets. No, it's a handwritten, some data which is there on the loose sheets. Now what these officers have done, they have gone to the marketing department desk. Whatever papers which are available in this particular cabin, they have picked those documents. And they have said that, look, these are the documentary evidences we rely upon for the purpose of confirming the taxes due but not paid. Now, what those documents contain? Those are the documents which actually consisted. Like, when you have various projects, like, I have tower A, tower B, tower C. or project A, project B, project C. From whom I have received. Like there is a printed statement. There is a printed MAS kind of thing. This MAS shows that tower-wise name of the customer, amount received, amount billed, amount to be further received. Now, contract-wise, I have various details. Now, this is a paper which was available in the marketing department. Now, that was picked up as a document for the purpose of putting to the test of my evidence. What this law says that? Section 145. Come to page number 24.6. The document has been defined under section 241, and as per this section, following shall be deemed as a documents. For what? For the purpose of evidence under your Information Technology Act, also evidence under the law. A microfilm, facsimile copy, that is your fax copy, a statement contained in document included a printed material produced by computer. Now, if you recollect, whenever inspection happens, they say, look, I'm going to take back the hard disk. The officer will take the hard disk to retrieve the data from this hard disk. Why? Any information I retrieve from the computer comes and proves me as an evidence. Any document which is printed, a material from a computer, treat it to be a evidence. Any information stored electronically in a device. In the process of search and seizure, there was a locker. In the locker, I get a pen drive like this. They say, look, this is a document. I can call any information stored in the device can be called as a information. Moving further. They say that all those pieces of information shall be deemed to be a document for the purpose of this law, and it shall be admissible in any proceedings under thereunder. So, like this example, what I've said, the real estate business, what happened over there, what turnover they have disclosed for the GST returns, what MIS they have. Now, MIS shows some information. What they have filed as per GST returns was perfectly matching with their bank statement. Now, what happened here? There is a bank statement, like say Bank A, Bank B. Bank A was disclosed to the GST authorities. Bank B was never disclosed to the GST authorities. This piece of paper consists the information of both Bank A and Bank B. The evidence was put forth for testing before the authorities concerned, saying that, my dear Commissioner, this is a statement I have recovered from the marketing department, where it shows project-wise what is the turnover. Unfortunately, this turnover is not forthcoming in this particular returns file. Without proof of production of the original. Now, the advocates, the businessmen always can take a plea that, my dear Commissioner, this is a piece of paper which is found in the marketing office. I haven't signed that. I as a CEO, I as a managing director, I haven't signed that. Now, this is a argument which will be put forth by the business person. What they say, all these are the documents which are available, can be put forth as a evidence for the purpose of drawing the conclusion thereof. Now, in case if they have a contrary to prove, they say that this particular aspect has to be proved by the businessman, saying that these documents cannot be admitted as evidence under your Evidence Act. So if something like this happens, sir, I have received a statement. Why shouldn't I rely on that statement? You have to have a counter evidence to prove that what is that paper, why that paper cannot be correlated with your business. The burden of proof is on the assessee. Section 145 is a powerful section. Whenever this search and seizure, the raid happens, they always take all these documents into custody for the purpose of putting for a test of evidence for the purpose of prosecution. Moving further. Section 148. Special procedure for certain process. Now, this is a miscellaneous provision. Like example, when real estate, real estate is something, it is not there in your syllabus. All the provisions connected with the development, land sharing, payment of taxes under reverse charge, all connected with your real estate provisions are not there under GST law as of today. This section 148 is a special provision where the government may formulate a special procedure. For what? For registration, filing of a return, payment of tax, and administration of that particular person. If government feels that certain industry cannot be compared with a regular business, they need to have a separate process. Example, take example of your United Nations organization, WHO, World Bank, etc. All these are specialized organizations where they have a UIN, unique identity number. Means for them, there is a separate process how registration happens. NRI, a person, NRTP, non-resident actual person, a person who doesn't belong to India. I cannot apply the provisions of Section 25 just like that. Reason, he doesn't have Aadhaar, he doesn't have PAN, he doesn't have a place of business in India, he doesn't have a rental agreement. So considering these things, the 148 says that the government has a right to notify a separate process for registration, return, payment of taxes, and administration overall. 150. Now, this is one important section which you have to look into. Section 150. There are certain people who have been notified under Section 150. These set of people are bound to provide some data when it was called by the officer concerned. Okay. Section 150, as of now, they have notified 16 set of people. What they say, the government has a right to call for information. If you recollect my example, the other day I gave example of anti-evasion. What happened in this anti-evasion case? This officer concerned has gone in a disguise as a person who has gone for interview, for housekeeping, for security, for various things. In the process, he was collecting some data. Once he has come back, he sat in his office, wrote a letter to the labor inspector for calling information. Look, this particular security service provider, you give me the information. As a labor inspector, you know how many employees are engaged by this particular person. Also, you let me know where all this service provider is acting as a contractor under your jurisdiction. Now, this is a power given in the Section 150. So as of today, 16 set of people have been notified where they have bound to give information which was called for. So this section says that information written. This 16 category of persons includes a taxable person. Like example, say Namita is registered in Maharashtra. Naveen is registered in Karnataka. Geeta is registered in Kerala. A GST officer who is doing the audit of, say, Geeta's books of accounts, from there, he gets to know that Geeta purchased certain items from Naveen. Geeta has made some purchases from Namita. This proper officer in Kerala can write a letter to Naveen, can write a letter to Namita asking that please provide this information in relation to the bank details, in relation to the tax invoices issued, in relation to the credit notes issued. So this is all what can be visualized for calling for the data. So this section 150 gives a right for an officer for calling. What is that? Registration details, like labor officer. So if we imagine labor inspector, we will this officer can write a letter to the labor officer saying that give me the list of registrations they have put, means how many people they have been employed, where all they have taken approval, or give me the books of accounts, like Namita's case, Geeta's case. Give me your bank balance confirmation, give me your bank statement, give me your invoice transactions, or give me a periodical return like ESA, EPF. The officer can write a letter to the labor inspector. Can I write a letter to PF department? Can I write a letter to income tax department? Please give me your this period. Get me the income tax return of this particular assessee. Why? They wanted to do the assessment of the individual person where they feel that there is a tax evasion happened. Documents containing details of the payment of tax. A classic example. When we talk about this payment of tax, there was one instance where an officer has written a letter to the electricity office, the electricity board, saying that for this particular assessee was drawing electricity from your particular office, kindly give me the details of the taxes paid every month. Like this information can be asked from income tax department, can also ask me from other parallel office. Details of transactions of goods and services are both, like stock inventory details. Transactions related to a bank account. Now, the officer can straight away write a letter to a banker saying that please provide me this information. I want to know what transactions happened with this particular person. So they can call for information from a banker directly. Transactions of purchase or sale of goods. Property right, interest in property under law for time in force. Now, with respect to property matters, most of you, while doing your internship, would have come across this scenario where when rent is paid to the landlord. Is it one landlord? There will be minimum 3 to 5 landlords. Why? If you refer to section 194I, there was a threshold limit. Just for assumption, monthly, the rent payable is 5 lakhs. Monthly rent payable is 5 lakhs. So if I pay this rent to one landlord, I may get this particular 194I where they have to pay TDS and claim a refund. They have to file an income tax return. To reduce that, what they will do, they will give 10 names. They've incorporated HUF. In HUF, they'll have say 10 to 15 people. All HUF will be made a party to the owner to that particular property. They'll give individual names. So if I split, say this 5 lakhs was split among 10 people, it comes to 50,000. 50 into 12, it comes to 6 lakhs. Now, they have a mechanism not to get exposed into GST, not to get exposed into income tax. Now, these are the various reasons where a property is registered. The officer concerned can write a letter to the concerned, the revenue authorities to get the information. Please let me know who are all the owners. Like it happened in Raheja Towers case in the state of Tamil Nadu. Service tax. This all happened in service tax. Where all Raheja Tower, like this is only for academical interest students, not otherwise. I'm just quoting these examples for you to correlate practically how it happens. The department offices have written letters to the municipal authorities to say, this particular land, please look into your records and say where all the properties are belonging to. Because they want to touch base the owners of the property for the purpose of recovery of tax. Now, they say that, look, this information I need for so-and-so period, for within so-and-so time. And we have read that in case if there is a failure to furnish this information, section 123 comes into picture where 5,000 is a penalty which can be levied upon. Now, similar to 150, 151 talks about your statistics. Now, there could be some scenario where the commissioner may feel that for this particular industry, let me get the statistics. Like example, there's a written file. I don't know how many of you have seen this Legal Metrology Act. Under Legal Metrology Act, there is an annual return to be filed. Now, in this annual return, they give the financial statements, they give the production details, they give the inventory register details, they also give the depreciation on plant and machinery. A lot of information goes into that return. No one knows why they collect and what they do with that. Commissioner feels that now there is a anti-evasion, the brainy, the super thought process is there in anti-evasion. So commissioner says that let me do the analysis of say pharmaceutical industry. COVID, like after COVID has come, many pharmaceutical industries, many hospitals have become blue chips overnight. They have become this what you call Amazon. There is a technical term they use. They have become the super rich entities overnight. So they want to analyze, say, this pharmaceutical industries. They call for information called statistics. Let me get this information to analyze what was their turnover, what was the turnover they have declared, and what is the pattern. If there is a jump of 50%, was this a pattern for all the companies? Say, assuming 10 companies they analyze, out of 10, 8 are above 50%, 2 are less than 10%. Then they have a suspicion on this. They try to collect further information on those two set of industries. This all happens in case of a section 151 collection of statistics. Next, bar on disclosure of information. Now, this is one important provision you need to keep in mind. This happens so that such a way that, say, there is like everyone would have seen this reality show called Big Boss. Like, see, this is one show which was brought from Western culture to our Indian culture. People get crazy looking at this Big Boss. People have this enthusiasm. What happens in the next house? What happens in the opposite side? What happens to the next door? Always they want to know what is happening. So this is a reality show where you lock 10 to 15 people in a particular room and you enjoy watching them, fighting them. And it's all a kind of fun for a set of people. Now, this is one particular event where information will be collected from one party. This information will be validated from other party. A goes to B, B goes to C, C goes to D. Now, A will be the main person. If A accepts the bill from B, B will take the bill from C. If C raises bill on B, C will get a bill from D. So it's a chain reaction. If one party defaults, all the people in the chain defaults. From that particular point of view, look at this provision. Bar on disclosure of information. This provision says that no information of an individual written or a part thereof with respect to a matter given for the purpose of section 150 or 151 shall, without previous consent in writing of the concerned person or his authorized representative, be published in such manner as to enable such particulars to be identified as a particular person and shall not be used for the purpose of proceedings under this act. They say that, look, you have called for information from labor inspector, you have called information from income tax department, various sources. Without consent of that particular person, without consent of an authorized person, this information cannot be published elsewhere. A simple example. From labor department, I get to know that there are 150 places where a security person has engaged his team. 150. Now, using that data, the commissioner cannot go and publicize in the media saying that so-and-so service provider having registered 150 places, he never paid the service tax, he never paid the GST. This so-and-so person has got a turnover of say 200 crores, but he never registered under GST law. How did they get to know that 200 crores is a turnover? From income tax authorities, they got to know. So they say that, look, whatever information you have received, you can act on that, but never ever disclose this information one to other. Like on the basis of A, you go to B saying that, look, A said this in the process of summons. Now you will not name A in the process to B. All this is a secretized information. So unless there is a permission given by that key person, the transformation of information from one person to another person cannot happen. And also, now this highlighted portion, this is amendment which took place recently for May 2022. October, this amendment has come into picture. Except for the purpose of prosecution under this act, for the time being in force, no person is engaged in collection of statistics under this act. Shall access to the data, it is permitted only to the person who is acting under section 150 or 151. They simply say that any information which is collected for section 150 or 151, they are the only people who are authorized to work on the data. Like GSTN or joint commissioner, additional commissioner. Not every person can lay hands onto that data to see what is there in that data. It is a secretized information. Only a person who was given that specific job can do that particular activity of analysis. Now, to protect the interest of the person, they say, look, whatever information you have got secretized, please ensure that it is used for the specific purpose. Let it not go to the other hands. Now, like one danger provision is, see, the moment there is a evasion of GST, it cannot travel to customs. It cannot travel to income tax just like that. They say that any information purposefully you have collected, you use it for your GST law. Don't use it for other provisions. The officer cannot threaten saying that, look, if you don't pay the tax and the GST, I'll write a letter to Commissioner of Income Tax. I'll write a letter to Commissioner of Customs. Now, all this is something which is protected under Section 152. Next. Power to take samples, like as we have discussed under Section 120, let me recollect. There was a section 67. Under section 67, there was a officer who has been engaged to go and purchase goods from the market to test whether the supplier is giving a bill. Similarly, the officer has a power to take samples for the purpose of doing some audit mechanism under GST law. Now, this 155 is a draconian provision. If you read this provision, you'll feel that why was the entire responsibility put on the businessman, not on the GST officer? I'll explain you this provision, then you'll understand what is the seriousness of the provision concern. The provision says that where a person claims that he's eligible for input tax credit under this act, the burden of proving such claim shall lie on such person. Simple English, just 2 lines English. Where a person claims that he is eligible for income tax, that is input tax credit, is eligible for input tax credit, the burden of proving the claim shall lie on such person. I'll give 2 examples for you to understand. See, whenever audit happens 2 years or 3 years down the line, transaction took place. For this example, I'll come to my Excel file to make you better understand. Now, say there is a transaction called 31st August 2021. Okay, I'll name it 2018 so that it's easy for us to correlate to the current time. Now, this is a transaction on 31st August 2018. There was a purchase of goods worth rupees 8,25,000. GST was paid at the rate of 12%. 1st December 2018, services were rendered to XYZ Private Limited for rupees 5 lakh. GST paid for 18%. Now, this is the transactions. Assuming that I have paid GST, this mostly happens in your income tax cases. These sort of interpretations are seen in our income tax provisions. Now, there was an audit conducted on 1st December 2021. Now, when the audit has happened, that point in time, these goods nor services are, see, services I cannot touch and feel. It's an intangible thing. Goods I have received, I have consumed, and I have sold. Now, this is what has happened. The department officer on 1st December picks 2 samples. He says, Praveen, let me know why should I give a benefit of 99,000 on these goods you have purchased, the 90,000 services which you have received. He says, you tell me why I have to give the benefit of ITC. This is a question. Now, question he says, you tell me why this tax should be not be reversed with interest and penalty. He says that I doubt, I suspect. What is the reason for suspicion? The officer says that. Look, my benefit of doubt comes that you made your net, your P&L shows net loss. Your suppliers or regular defaulters. Now, these are the two reasons. These are the two reasons he attributed, saying that, look, you made a loss. That means the goods which you purchased, you never supplied. You have received services. What is the guarantee that this service was in relation to your business? This is how the burden of proof under section 155 is tested. Now, why should this burden not be put on to the officer concerned? I made a loss. Why I made a loss? I have this purchase price I couldn't pass on to my customer. Or there is a particular batch process where my production got rejected. Or there could be a particular purchases which was done. Unfortunately, I could not supply it to the satisfaction of the customer. I manufactured and supplied the goods, customer didn't accept it. And those goods of no use, I have to scrap those particular material. Services I have received. Now, what is the proof? I have received, I have consumed. Say training services. I had 50 employees, I have spent 5 lakhs on 50 employees. Per employee, I have spent 10,000. Now, they say, officer says, why you have spent on 10,000? Why did you gave a training of HR to a housekeeping person? Why did you give a training of finance and accounts to a production person? I suspect that this training is of no use. Now, this is how the burden of proof comes into picture to satisfy the officer's understanding, right? So, burden of proof says that it is the assessee who has claimed the ITC to prove to the satisfaction officer that why the benefit of input tax credit should not be given. Now, there's a question from Namita. So, documents picked up from the marketing department, will this be considered as evidence? Definitely yes. Definitely yes. Why it should not be considered? That the officer concerned, the departmental officer, sorry, the businessman has to prove why it cannot be relied upon as a evidence. Right? This is the answer to your question, Namita. Moving on further. Next topic in discussion. Protection of action taken under this act. Now, this act is very clear. Look, whatever penal provisions are there, like there is a provision called section 124, section 126, which says that if you disclose information, I am going to penalize you. Whatever may happen, there are certain people who have been completely shielded. They don't get a exposure under GST. Who are those people? President of India, president of a state, members or employees of a tribunal. Any decision given by a tribunal. The tribunal decisions may be in favor of the assessing, may be in favor of the department. Just because some interpretation was done by a tribunal wrongly, they should not be punished. They should not be penalized. Because if you protect them, then only they can give their job better fashion. Moving on, any person who is authorized by a tribunal for a particular purpose of conducting the functions of a tribunal. And the same fashion, they have said that none of the officers appointed under this act shall be punished if they have done their activity in a good faith. So all officers under this law have been protected. Like example, proper officer who happens to be a check post officer levies a penalty, issues a detention notice under section 129. Tax invoice is there, e-way bill is there, my goods as per tax invoice, e-way bill perfectly matches. Everything is correct. The only issue is this check post officer says that, Praveen, you're moving material from say Tamil Nadu to Maharashtra, which is called beetle nut. This beetle nut which you're transporting, you have said 5% is the rate of tax. I understand that 12% is the rate of tax. So you have to pay differential tax of 7%. Otherwise, I'm not going to release the vehicle. Now, this is a contention of the officer. The officer doesn't have a right to question in relation to their valuation. This is a offense which should have been punished. But unfortunately, 157 comes and says the officer who happens to be a check post officer, he did this activity in a good faith, he should not be punished. The moment I start punishing the check post officer, none of the officer will come forward. So unfortunately, 157 comes forward and says, I'm going to protect the interest of the tax officers, right? Students, we are at 8:10. Let's have a break for 5 minutes. 8:15, let's resume back. Our discussion. So, section 157 always protects the interest of the proper officer, where they prove that it is done in a good faith. Now, It may be harassment for the businessman, but the officer says, sir, I have I feel that there is a suspicion. I feel that this is a tax evader. He's a tax evader. There is a tax evasion. So whenever the benefit of doubt is attributable to a good faith, the officer is completely protected. There was one High Court judgment from Gujarat, fantastic in relation to refund application. The officer has passed an order rejecting the refund application of the applicant. Like say, as per the law, there was a show cause notice. There should be a reply to the show cause notice, a personal hearing. Then the officer should mention in writing why the refund is being rejected. Not doing anything, the learned assistant commissioner have rejected the particular order. When it went into the High Court as a writ petition, Honorable High Court has looked into this point and say sheer non-application of the legal process. There was a clear-cut rule, there was a clear-cut section where it says what is the process to be adopted. Without issuing a show cause notice, without a hearing, you have passed an order for rejection. And in the rejection, you didn't mention what is the reason for rejection. You just said that this order is rejected because it is not entitled for, assess is not entitled for. There was something called strictures. The learned judge have put a personal penalty of ₹10,000 on the concerned officer, stating that you are supposed to read the law and pass a adjudication order. And they have marked a copy to commissioner saying that kindly give a training to your officers concerned. So directly, as per the law, we cannot do anything. A person who has been aggrieved, the only remedy we have is Article 226. That is, file a writ petition, explain your agony, explain your harassment to the learned judge with the documentary evidence. You cannot just go and say, sir, I went at 11 o'clock, he made me to sit till 5 o'clock. That's why I come to High Court. Don't do all that. You have to have a documentary evidence. What is that you have given? What is that officer has verified? What is that officer has understood? And as per the law, what he is supposed to do, what he has failed. When you have all this documentary evidence, that becomes a base for the learned judges to act upon those officers. As of now, 157 comes as a shielding protection for those officers. Now, this section 160, I would say fantastic section, which completely overrides, like I gave an example of a school child. Parents protect the interest of a school children. The same way this section 160 comes into protection. What it says, look at the heading. Assessment proceedings, etc., not to be invalid on certain grounds. What they say? Assessment, reassessment, adjudication, review, revision, appeal, rectification, notice, summons, other proceedings. Now, they just named 10. Now, what all could be there, they have added to the extent possible. Which is done, which is accepted, which is made, which is issued or initiated. Assessment done, reassessment accepted, adjudication made, a revision order issued, or appeal order passed, rectification process initiated, issuance of a show cause notice initiated. All which activities have been done in as per the provisions of this Act shall be invalid or shall not be. I think there is a not which is missing. Shall not be, here there is a word not which is not mentioned. Shall not be invalid or deemed to be invalid merely because of a mistake, because of a defect, because of a omission. They say that any of these things done where a simple example, show cause notice. Show cause notice should have been issued to XYZ Private Limited. But by mistake, show cause notice was issued to XYZ and Co. XYZ Private Limited, XYZ Co. Both are in the same premises. Both have a different bifurcation. Mistakenly, a show cause notice given to XYZ Private Limited, addressed to XYZ and Co. Intention was to give to Private Limited, was given to XYZ and Co. Look at the law, the way they have done. There is a defect. What is a defect? Example, DIN, the document identification number. As per the law, CBAC has given a circular, any notice, any correspondence, there should be a DIN. There is a defect in the notice. What was the defect? DIN should be there, but not there. Omission. What was the omission? They're supposed to mention for financially 17-18, when I'm quantifying, I have to quantify that this particular transaction tax to be demanded, but not done. I have omitted a particular para, right? Now, any of these activities, that is mistake, defect, omission. Look at the way the language uses. The law says that all these activities which are done, which are proceedings, nothing but if they have done with the intent, with the purpose, with the requirement of the existing law, the officer has done which is as per the intent of the law, as per the purpose of the law, as per the requirement of the law, then none of them shall be set aside. None of them shall be called as invalid. Like example, a document has a defect. What is the defect? The date should be 21st Jan 2021. By mistake, they have mentioned as 21st June 2021. Now, for a moment, like we did a calculation for issuance of a show cause notice, financial year 17-18. They say that, sir, I have mentioned the date on 21st June 2021 instead of 21st Jan 2021. Sir, it's a typographical mistake. How can you issue a notice dated June in the January? Technically, I have received a notice. This notice has a date of 21/6/2021, but it was actually received on 31st Jan 2021. Now, when I have received a notice dated June 2021, how do I reply before the date? No, it is a mistake. Similarly, defect, not having a DIN number. What they say, if this mistake, if this defect are in conformity with the intent of the law. So I admit that though they have been done, nothing will be called as invalid as long as it is in line with the intent of the law. So they say it has got an effect and it is in conformity with the law. The provision says that all those mistakes will be deemed to be having effect. It is deemed to be in conformity law as long as the intent, purpose, and requirements of this act exist. So this is how they protect the interest of the officers. Assuming for a minute the same mistake was done by assessing. The officer says, Praveen, you gave a reply dated 21st June 2021, but it should have been given on 21st Jan 2021. Because you gave 5 months belatedly, I'm going to reject your notice, reply. I'm going to confirm an order on you. But this is how the department explains. So the same law is not applicable to the assessee. It is only to the department. Now, coming back. Further, now look at this subsection 2. Subsection 2 very clearly says that I admit that there is a defect. I admit that there is a mistake. I admit that there is a gross negligence. Having said all these three things, the service of a notice, order, communication shall not be questioned. Look, it shall not be questioned when it has already been acted upon. I have received a show cause notice without having a DIN. Now, as per CBAC instruction, if a notice is received, it doesn't have a DIN, Honorable Finance Minister Nirmala Sitharaman say, please tear off that notice, put into the dustbin. I can very well do that. But they say, if at all, if you have already acted upon that, what you will do? You as a honest taxpayer, you will write back to the officer concerned. My dear Superintendent, you have given a show cause notice. As per CBAC instruction, a DIN should be there. But you have not mentioned a DIN. What I've done, I have acted upon that. So the moment I act upon that, it shall not be called in question. It cannot be questioned. Point number 2. Where such service has not been called in question in a earlier proceedings commenced, which is continued and which has been finalized. Assuming that there is a show cause notice, this show cause notice was continued with its proceedings and it has been confirmed. Means I received a show cause notice. I responded to the show cause notice. At the time of adjudication order, I realized that there was a defective show cause notice. They say that, see, once you have admitted and you have started acting upon, I cannot go back and question the notice. I can question only the notice if you are not reacted upon. Now it is like this. If you want to, let's assuming for a moment, there was an insect which has bitten me. The insect which has bitten me is a poisonous insect. To get away from that poison, I need to inject a medicine, a drug. Assuming for a moment, this drug is a narcotic drug, means it is a Schedule H drug. In any pharmacy business, there is something called Schedule H drugs, means those drugs should be sold only with the prior permission of a medical drug inspector. If the drug inspector does not give a permission, they cannot sell that drug. Now, for a moment, the insect has come and bitten me. I don't have a time to go to the drug inspector to take a permission. I took that the Schedule H drug. I pierced that injection to myself. Will it be called as a punishable offense? They say yes, it is a punishable offense. You should have come to me. You should have taken an approval. Now, if I don't come to you, they say you have violated the law. When a show cause notice comes, they expect that I should respond back within 7 days. They expect that within 30 days I have to respond back. Within 15 days I have to respond back. So one way you say that because there is a defect, you don't respond. If I don't respond, that fellow will pass an order. Now, if I respond, they say you have responded. That's why this question of defect cannot be questioned. Now, section 160, it's a what you call circular reference. In MS Excel, if you see circular reference, that is how this provision was drafted. So this is to do with section 160, where they say a notice or an order will not be invalid because of these aspects of mistake, defect, or omission. Even if these three happens, if you keep silence, then that could be challenged at a higher forum. There's one question from Namita. Let me just take that question. Namita is asking this question. So in a high court, how the assessee has brought the documentary evidence that offense was that officer has not given an opportunity of being heard. Good question, Namita. See, in a court of law, generally it so happens that whenever we go for a hearing to high court, there will be a question of fact, there is a question of law. It's a question of law. It is not a question of fact. I have put forward to the Honorable Justice that, look, there was a procedure laid out, the procedure was not followed. That's a question of law. The officer was supposed to follow the law, he didn't follow it. What was that? Whenever I file an application, this application will be acknowledged. Once the acknowledgement has come, there should be a deficiency memo. Once a deficiency memo, there should be a show cause notice, a reply to show cause notice, a personal hearing, then finally adjudication. Now, this is a law prescribed under Rule 93. If I don't follow that particular process, I'll go back to the office, my Honorable High Court, and say, my dear, my lord, day 1, day 2, day 3, day 4, day 5. I'll put a sequential chronology saying that day 1 I filed, day 2 I received acknowledgement, day 3 I received a deficiency memo, day 4 I gave a reply, day 5 I directly received an order. In between day 4 and day 5, there are 3 more steps to be followed, not followed. That's how they have violated the principles of law. So this is how it will be established in the court of law. Next, there is one more question. Sir, in section 155, okay. If the officer inquired with the businessman of transaction which is secret of business, if he does not explain that, well, ITC will block. Definitely yes. Burden of proof is there with the assessee. You cannot call that it's a trade secret. I cannot reveal that information. Rather, you are supposed to prove that information. I cannot keep that as a confidential thing. Next. Mistakes apparent on record. Now, this is one slide I want to bring to your knowledge how the language is being drafted, why it is being drafted this fashion. Now, why I'm telling all these things, not theoretical. Once you get into the qualified, you have to see how these mistakes are happening. Any mistake which is apparent on the face of the record, there is a time limit of 3 months for correction. And this correction can happen by themselves or it is brought to their knowledge. They say that this correction can be done within a span of 3 months. So when the correction is done for 3 months, they say, provided that no rectification can be done after a period of 6 months. Say, 31st December 2020, advance ruling authority has given their finding. Based on this advance ruling decision on 31st December 2020, they say 3 months is the time limit. Jan, Feb, March. On or before 31st March, I have to go back to get it a rectification. Now, this provision says, provided that no rectification should be done after a period of 6 months. April, May, June, July, August, September. After 30th September, no rectification will be done. First and foremost, they say that 3 months is the time limit. Now, why should I have additional 3 months? When you are not going to look beyond 3 months, why should I have 6 months? This is a fact of point where there is no clarity to justify. Levy of fee. Any document which is in the custody of the officer, authority, by paying a nominal fee, I can take the documents, a copy of those documents. Example, when there is a adjudication matter, like say generally, when a matter has gone for appeal, it may take 3 years, it may take 5 years to get the matter listed for hearing. In say in case of tribunal, in case of appeal, commission appeals, etc. At times it so happens that at the assessee end, the employee changes. The person who handles the case do change. So when the matter comes for hearing, when I go for hearing, I don't have the appeal copy. I don't have the submissions copy. Under section 163, I pay a nominal fee to take the copy of the entire records which are available with the GST authority concerned. So this 163 says that wherever a document, a copy of order or a document which is available with the officer, by paying some amount, I can take a copy of those documents for me to act upon. Now, see, section 164, I have an authority to make rules. Now, all the GST rules, what we have seen as of today, have their base, their rule from section 164. They say that on the recommendations of the council, they can, the government may make rules, or without prejudice to the generality, that is, without foregoing to say, even otherwise, if council doesn't recommend, by they themselves may make the rules. Now, look at the language. I want to draw your matter English, how the language is written here. Without prejudice to the generality of the provisions of subsection 1, the government may make rules for all or any of the matters which by this act are required to be or may be prescribed. Now, is it required to have this language? They say matters which by this act are required to be or may be prescribed. The language is very, very left hand. There is no dictionary to write a law. In simple terms, section 164 says that government has the authority to frame a rule. That's all. So whatever rules they want, they can make under 164. Now, this is a dangerous authority which was given. Now, once they have been given a power, how the power was given? They can make a retrospective effect. A rule, like we are on 3rd Feb 2022. They can formulate a rule under GSTR 1, which could be made effective from retrospective. That is how the power was given. But not earlier than the day on which the provisions of this act, that is 1st July 17. You can go retrospective, that is up to 1st July 17, not beyond that. There was a famous judgment in case of AAP and Co, AAP. I would recommend, academically, I don't know, if you're good at reading tax laws, you read this particular case law called AAP and Co. This is in Gujarat High Court. And AAP is a firm of chartered accountants. a beautiful argument with respect to input tax credit under GST law, section 16. This firm of chartered accountants came before the authorities and said, look, you say that there is a time limit for availment of input tax credit. GSTR 3 is a written under section 39. GSTR 3B is not a written under section 39. With this argument, financial year 17-18, financial year 18-19, they went to the Gujarat High Court and said, my lord, there is no time limit under section 16 for the simple reason under section 39. 39 talks about GSTR 3. Section 39 never talks about GSTR 3B. This was a simple argument put forth by this firm of chartered accountants. And Honorable Gujarat High Court said, yes, there is an argument. And financial year 17-18, financial year 18-19, they said GSTR 3B is not a written under section 39. Looking at this Gujarat High Court judgment, there was an amendment to Rule 60, which was made retrospectively from 1st July 2017 in the year 2018. Now, this is the authority where they say the government has a right to make a retrospective amendment. Now, when an act is framed such a way, even Supreme Court cannot interfere. Supreme Court says that, look, they have formulated an act. This act was passed by Parliament. What can I say? When Parliament has upheld, I have to go with this. And they say, whenever rules are framed, they have a authority to impose a penalty. Like, no, they say, wherever a person has not complied, contravened with these rules, a penalty can be passed which may not exceed rupees 10,000. Which may not exceed rupees 10,000. Now, what is happening? If you read your section 122, if you read your section 124, 125, 123, does it exceed 10,000? It goes to 25,000. Reason, they say, this rules frame may provide. It is not shall. It is not shall. So, they recommended that any of the violation, example, registration to be obtained but not obtained, return to be filed but not filed, turnover to be disclosed but not disclosed, ITC availed wrong. So all these rules, whenever there is a violation, there is a recommendation of 10,000. That means they can go beyond 10,000. And when you have beyond 10,000, what is the purpose of having this law itself? I'm not criticizing students. No, beyond your examination, when you read a law, you need to read why it has come. What is the purpose of this coming into existence? Now, my section 166 says that any rules which have been formulated, these rules shall be put before the Parliament. There is an upper house, there is a lower house. So all these rules which have been formulated will be put before this house. Let me just take my highlighter. Yeah. Any rules which, any rule, regulation, or a notification, any of these three, as soon as the Parliament has functions, like where there is a continuous house for a period of 30 days, these rule or regulations will be put before the Parliament. Reason, if you don't put before the Parliament, it doesn't become a law. So this rule or regulation which has been put before a house, generally when it goes for Lok Sabha and Raj Sabha, it could so happen that this law can be put forth, can be accepted as it is, or it can be modified to a certain extent. They may accept the law as it is, or they may modify to some portion of the rule should not be given effect to. So what they say, whatever modification or amendment is there, prior to that period, any action taken by the officer will be put into force. I'll just give an example. The way the officers make fun of the law. Say this Rule 60 amendment for including GSTR 3B as a written under section 39. Now, assuming that 1st August 2018, I don't know, 1st August 2018, this rule was enacted by a notification. On, say, like the winter season happened and they have concluded on, say, 30th September or 31st December. 31st December 18, both the houses approved with slight modification. Now, what they have done, this rule, this amendment was like, assuming that there is a notification 12 of 2018, just for academic purpose. By a notification 12 of 2018, they have made a amendment. Notification came on 1st August. This was approved by both the houses on 31st December. Now, there is a gap. What is the gap? During this intervening period, any act, any activity or proceeding shall not be nullified. There was a delay in implementing this act with a slight modification. When there was a slight modification done, this slight modification is going to be effective from 31st December 18. So any proceeding done till 31st December 18. Example, the officer on the basis of this notification passed a notice on 1st August. This particular notice was adjudicated on, say, 15th of September 18. On 15th September 18, there was an adjudication. Assessee has admitted and he has paid the tax. And assuming on 31st December 18, that particular order has to be corrected for some portion of the notification. What this section says, whatever amendment has happened from the date of notification till the date of this approval stands good. It cannot be tested before the authority is concerned. Rather, this with a good intent holds good. So they say that that particular amendment is there, it holds good if it is done with a good intent of law. This modification or this setting aside shall not be bonding on the officer to set aside that particular regulation. Next. This is particular amendment which I was talking, important provision 168A. Now, let me see if there are any questions so far. So far, so good. No questions. Section 168A. Now, pandemic has come. March 2020, across India, the government of India has declared that this is pandemic and lockdown nationwide. Last 4 decades, I would say this is the first time. Prior to that, plague was there, where they have some portions of India, because of plague, they have put this kind of restrictions. First time, across India, there was a pandemic declared. There was this act called Taxation and Other Laws, which has been notified on 29 September 2020 by President. President has notified on September 2020. However, in April 2020 itself, government has invoked the provisions of this provision in April 2020 itself. By virtue of these provisions, they have felt that certain activities cannot be implemented because it's a pandemic. COVID, there was many businesses have been affected. So let us give a relaxation. Let us not impose. Let us not burden the taxpayer. Rather, let us not burden the assessee concerned. By invoking this provision, let me come to my Excel file to explain you this. Okay. Say 20th March 2020, e-way bill prepared for delivery to customer. Validity on the basis of distance, it is for 15 days. The validity was given for 15 days. Now, everyone know that from 21st March 2020, across India, there was a nationwide lockdown. Only essentials are permitted. Gradually, from 15th of May 2020, things become normal, right? Now, in this scenario, students, e-way bill which was prepared on 20th March gets valid expired on 5th of May 2020. Now, what happened here? Till 15th May, the truck which was having material was there at a particular point without any movement. Reason? The government has declared nationwide lockdown. For me, it is very difficult to move the truck. So what they have done, they have invoked these provisions of section 168A and say that, look, I'm going to give you an extension for various activities. So in the process of doing this particular extension, government felt, let me not give you benefit in relation to certain provisions such as compliance with your time of supply and value of supply. Any invoice prepaid, you need to pay tax. The moment you raise the invoice on March, you pay tax by April. Sir, I have raised the invoice, but I have not received money. Because of pandemic, my customer said, come after 2 months. Sir, I have raised the invoice on accrual basis. I raised a bill for my monthly rental. The landlord, the tenant says that, sir, COVID factory is banned. My shop is closed. I don't have money to pay. They have not relaxed time of supply. Your time of supply, that is the liability to pay tax, the liability to file return, responsibility to issue tax invoice. All those provisions have been kept intact. So only few aspects where they felt the government needs some relaxation. That is either the business person or the tax man. I would say proper officer. For these two, for businessmen, e-way bill related aspects, appeal to be filed, there is a time limit, or some application for correction, or you have to, from assessee point of view, you have to file your returns. Some sort of relaxation was there with respect to this aspects from businessman point of view. Returns with a nominal interest. From taxman point of view, many relaxations were given. Registration. There is a concept of deeming registration. The moment I file application within 15 days, if the officer doesn't take an action, it is deemed that my application is accepted. They have happily lifted that particular deeming restriction, saying that till the pandemic continues, the officer deeming registration provision will not be applicable. Audit, inspection, then your appeals, where orders have to be passed. Majority of the activities where the officer have to respond upon, happily these aspects have been expanded. This is thanks to this provision called 168A, where the government has invoked taxation and other laws for giving the relaxation. So this is the importance of this provision called 168A. So what it says, the government has notified that notwithstanding anything contained in this act, that is CGST, the government on the recommendations of the council, in fact, council also was not there. They just use this language as it is. On the exemption, this order, this is a order which was passed for the taking care of income tax, indirect tax, and other LA laws. They have extended the time limit specified in or prescribed or notified. Again, look at the language. Is this required to write this way? the time limit specified in the Act, prescribed in the Act, notified under the Act. So all this they are put together and say anything specified in respect of actions which cannot be completed or complied. Now, look at the language they have used. The respect of actions which cannot be completed or complied. This sounds good, but they have used the language completed or complied. Maybe typographical error. Let's relax on that. So they say that any activity which cannot be completed by the tax officer, which cannot be complied by the assessee. Sir, e-way bill, I cannot comply. Sir, maintenance of books of accounts, I don't visit the factory. How do you expect me to sign? Another example, digital signature. Now, all of you are aware that to file my GSTR 3B or GSTR 1, this is mandatory. When this COVID has come, everyone started working from home. The DS is there at office. So I am not permitted to travel because there is a travel restriction. So they have enabled EVC through your OTP mechanism to file returns. So any activity which cannot be complied, they took a shelter under 168A due to force majeure. Now, this clause called force majeure, this got a prominence when COVID started. Everyone started looking into the rental agreement to see was there any force majeure clause. If there's a force majeure clause, go to High Court, file a writ petition under Article 226, get a waiver not to pay rentals. Many businessmen have invoked this force majeure clause by virtue of which they could save lakhs of rupees in courts of law. Now, what is that force majeure? This has been defined under this Act. What they have said, force majeure means a case of war, epidemic. Now, this is notified. Ministry of Health has declared COVID as epidemic. Flood, drought, fire, cyclone, earthquake, or any other calamity caused by nature or otherwise. Now, COVID, they say it's a man-made disaster affecting the implementation of any provisions of this Act. This is called as force majeure. Again and again, I repeat, students, for academical interest, whenever you read a contract, look precisely this force majeure. Does this force majeure include epidemic? Many of these rental agreements, they didn't have this term called epidemic. But fortunately, who were very good in drafting, they also included the term epidemic. So if there was a reference to a rental agreement where there was an invocation of force majeure, by virtue of this force majeure, the tenant didn't pay rental to the landlord. Whoever has approached the High Court, where they refer to that a rental agreement saying that there was a reference to force majeure, because the Minister of Health has declared this is an epidemic, we will not pay rentals. This was the beauty of my notification 168A. Let me see if there are any doubts so far. Namita has this doubt. What she says, said section 163, fees needs to be paid as all documents are required to be sent to the assessee. What happens, Namita? See, when I go for this appeal tribunal, I'll share my own experience. There was a case which has been posted for hearing 2016. There was a bad case which has come for hearing, which was pertaining to the year 2008. After 8 years, the matter came for hearing. When I got this this intimation for personal hearing, the assessee doesn't have the papers. That is the appellate book. We gone to the appellate authority. We paid per page 5 rupees as a fees. We have paid, like, there were around 50 pages or some 150 or 180 rupees. We paid that fees, got a copy of that appeal booklet. This is how it happens. So they have a fixed fees of 5 rupees per paper to take from the concerned authority. Now, moving further. Service of a notice. Now, this is a matter where, just give me. This section 169 says that how a notice can be served. There are various mechanisms. Notice can be given by hand. Notice can be given at the address of a taxable person, or it can be given to an authorized representative. It can be given to a taxable person on hand. who is coming for a hearing. So it can be given directly by a messenger at your address, or it can be given at hand when someone visits the department, or it can be given by a speed post or a courier with acknowledgement due. Now, there is a technical term called RPAD, Register Post Acknowledgement Due. I would recommend all of you, when you get into the practice, whenever you write a letter to the department, please use this mechanism called RPAD, means sending a register post with the acknowledgement due. You don't want to visit to the department, you want to write some communication to them, intimation to them. Use this form called RPAD, register post acknowledgement due, or mechanism of email, or making availability on common portal. These are certain mechanisms where a notice can be serviced. So what if the assist is not traceable? Put an advertisement in newspaper. Sir, if there is a business where this particular person is doing business, so please put a notice in front of the building. All these things are not possible. Then there is a department. In the department, there is a notice board. I don't know how many of you have visited this service tax or now GST department. The moment you visit the GST office, there is a notice board. Certain notices are there where they say, we try to send a notice, but it didn't serve because you're not there in that premises. So those notices which couldn't be served and there was no action by a newspaper, it could be put on a notice of the department officer concerned. All these are considered as a mechanism where a notice is served to the assessee concerned. And they say, when a notice is given by a register post and the time generally takes for serving, it is deemed to be that within that day it has been served. Now, if the register post has not come, we have to go back and to say the officer, my dear officer, on records, I haven't received any document. If you have any proof, kindly provide me that copy. Now, this is just to communicate that how a notice can be communicated. One of the students asked, said, how did this communication happens in case of your this notice? Like I have given an address. Namita asked this question. So I have changed, I have vacated that address. How do I know that this notice has been served? So they have sent an email, but this email belongs to an employee who has left the organization. There are various means where this communication happens. Now, as per registration certificate, your contact number, your email address, your address, whatever is there, if a communication is given to that, it is deemed that it is given to that particular registered person. Couple of cases where the applicant has gone to the High Court saying that, sir, they have sent an email, but I haven't received an email. Through this IT department, the information technology department, they took a copy to establish to which email it was sent, and to invoking Information Technology Act, they say this is a notice which is legally tended to be a valid document. Last point of our today's discussion in relation to adjustment of taxes, rounding of taxes. Now, assuming that there is a taxable value and there is a GST, SGST, CGST. Now, taxable value 79,815 rupees. SGST 9%, CGST 9%. Now, this mechanism, what I can do, I can apply something called round off. I round it to nearest digit. Now, what is happening here? 35 paise gone. Now, can a department officer send a show cause notice me on this 35 paise? Now, this mechanism they have explained here, saying that as per Miscellaneous Provision, Section 170, any taxable person who have a transaction where the money is exceeding 50 paisa, then it could be increased to rupees 1 rupee. If the transaction is less than 50 paisa, then it can be ignored. So applying the provisions of Section 170, if that 35 paisa is there, I can omit 35 paisa and bring it down. Now the question comes here. Sir, you have said that ignore 75 paisa. I'm okay with that. But there are certain tradesmen who are very conscious, very keen on this paisa. can this 7183 made a 7184? Now, this happens in your Tally. In Tally, I don't know how many of you have tested this feature. In Tally, if you have asked, no, the rounding of it says round off to nearest 1 rupee. Then what happens? This Tally, though it is 7183.35, it will not bring down to 7183. Rather, it pushes to 7184. That means I bill more than what I'm supposed to bill. So section 170 as of today makes a permission that I can round it off. If it is a paisa less than 50 paisa, reduce that amount. If it is exceeding that 50 paisa, you round it off to the next 1 rupee. So if it is 71 rupees 85 paisa, you can round it off to 72 rupees. This is what they have explained. Next. Before I go further, there is one question from Namita. Sir, in section 160, if we get a reply on 30th Jan 2021, if we give a reply on 30th Jan 2021, dated 28th June 2021, okay, then can it be treated as mistake as actually it is received on 30th Jan? This is what happens, Namita. Officer will send back saying that this reply you have given 28th June 2021, which is not in conformity with the date, so I will not take into consideration. Though it is a mistake apparent, though it is like no, it is just a clerical error. Officer will reject in generality. Can you take a shelter under 160? Answer is no. It is only applicable to the officer consent and not to the assessee per se. Right? Now, next is your there is a provision called removal of difficulties. I'll come to this in the next session. And 171. There are two topics, 171 and 172. These two topics, for paucity of time, I'll take up in the next session. So till then, good night, goodbye.